Hi to everyone guys and welcome back in this new video. In this video we will be examining the critical levels that both Bitcoin and Ethereum need to maintain, otherwise we might witness a market collapse. Additionally, I want to analyze with you the statement made by Fidelity Investment about Bitcoin, and I can tell you that it's something truly interesting. But before we dive into details, I had to ask you, as always, for support to the channel by leaving a like and subscribe to the channel. Perfect, let's start.
We start with a bombshell news. The global investment bank Jefferies has stated that the collapse of the USD paper standard will likely benefit both gold and Bitcoin, or more precisely, the holders of both gold and Bitcoin. This is probably because, according to their research, a portion of funds will flow into these two stores of value. In fact, with this statement, it implies that Bitcoin is considered a store of value on par with or as an alternative to gold, which is very interesting. For those who might have missed it, Fidelity Digital Assets, which is one of the largest entities that has requested the ETF to replicate spot Bitcoin, managing around $4.5 trillion, has recently released a paper dedicated entirely to Bitcoin. Of course, I want to emphasize that this paper serves to explain to potential investors who will be investing in a hypothetical spot ETF issued by Fidelity, so we can say that this report is aimed at promoting the potential spot ETF in the United States. However, it's very interesting if the SEC were to approve it, because within this report, Fidelity has made various distinctions. They have declared that Bitcoin is the only digital asset that serves the role of sound money. In Fidelity's words, this is due to the unmatched security and decentralization, which are the most important features of Bitcoin. It has also stated that Bitcoin should be evaluated by investors as the entry point for those who want to enter the crypto market. I strongly agree with this statement, but the main point of this report is that Bitcoin could be one of the major stores of value. Let's connect this to the other statement made by Jefferies Bank. Before we delve into the charts, I have some very interesting things to show you, especially concerning liquidations and what they could trigger in the price of Bitcoin. I would like to remind you that for those who want to start using and testing bybit, one of the most interesting and secure centralized exchanges for active trading in the crypto markets, there is a promotion for new registrants. In fact, the more you trade, the more chances you have to win. By signing up using the link I provided in the description below and generating trading volume, you can participate in the Wheel of Fortune. There are various prizes to be won, such as an iPhone 15 Pro, an Apple Watch, an iPad Pro, or Apple headphones. Plus, there's a lifetime discount on trading fees, folks. I've included all the details in the description below. Let's get into the heart of this video and see how the markets have been performing in the last 24 hours. So, Bitcoin, folks, yesterday we were talking about this trend line. We discussed how, if we switch to the 4-hour chart for a clearer view, I mentioned that this could very well be a breakout of this trend line and will retest what has happened. In fact, if we look closely, we have indeed witnessed the retest, and unfortunately, folks, we have definitively lost this level. I was telling you, besides this zone, there's also this trend line of interest. In fact, if we switch to the line chart, it's much clearer. We can see that, folks, this area has been very important to hold, because if we were to lose this zone, we could head straight to the first support zone, which is around $26,000. But it's essential to check the daily chart and, most importantly, how it closes today to really define this loss. We need to consider not just where Bitcoin is at this moment, but its closure on the daily chart. For now, it has broken through it, but anything could happen today, as I mentioned in yesterday's video. If we get a confirmation of closure, I might consider going short, at least down to the $25,800 zone. Of course, it also depends on the volumes. Lately, we've been seeing relatively low volumes on the daily chart, and this dump, in quotation marks, could be further accentuated by the very, very low volumes. But let's take a look at Bitcoin dominance. It's quite interesting how it's shaping up. Starting from a relative low on August 21st, 2023, we've been witnessing a steadily rising Bitcoin dominance, which has increased from 48.88% to today's percentage of 51.4%. This is because, cyclically speaking, when new capital flows, it tends to pour into Bitcoin before moving on to the higher risk altcoins in the cryptocurrency market. For those looking to invest, the asset with the least risk in this sector typically points towards Bitcoin. Now let's take a look at Ethereum because it's at a very critical level. Just like Bitcoin, it's crucial to keep an eye on. If we consider this zone, which marks this relative low, it's essentially the lower end of the range that Ethereum has been carrying since August 16, 2023. We are currently testing it. Folks, we have these two levels of interest to consider, which could actually slow down a potential decline in the event of a breakout. As I mentioned in the introduction, we have very important levels that act as magnets for Bitcoin. If we take Bitcoin USDT on the liquidation heat map into account, we can see that the real points of interest, if we look at a 1-month time frame, are right around the $26,000 area. See how many liquidation zones we have? In fact, between $26,000 and $25,800, there is a significant area of intense green. And you know very well that the closer it is to yellow, the higher the order sizes to be liquidated. We have seen many times how, for example, on October 2nd, Bitcoin tends to target these zones to liquidate certain market players. These are likely moves induced by large investors who use these areas to liquidate others and position themselves. So folks, be cautious because this is a magnet zone, and especially if we were to lose the $27,000 zone, we could easily reach it without any issues.
Perfect, in this video we have covered the latest news in the crypto market. If you haven't already done, I ask you to support the channel by leaving a like and subscribing. For subscribers, we will see you in the next video. Bye!